Good afternoon, everybody. Apologize for starting a little bit late, and in low on lights and some tech issues. This is Sid Shamim. We record these podcasts slash webcasts, those videos that goes to our YouTube channel, and the podcast goes to our podcast channel. The topic today is a bit complicated. That's the reason why I've got experts like Seth, Brandon, and Ron. The stuff we're going to talk about, I want to keep it very simple. But people who are in our audience right now, if you are looking to, if you're an investor, if you're a real estate investor, and you're looking to understand what a fund manager looks like, and the reason I felt this podcast and this recording to be important because Seth, Brandon, and Rohan, these guys will share the legal aspect of it and how this podcast going to explain you what the fund managers really is and how this legally this economic work. I was talking to somebody who was brand new to this fund manager concept, and this is what he told me. Well, it sounds like a pyramid scheme. I kid you not. That's what when he told me that, I was like, man, there has to be an explanation to this whole thing and why fund managers is a preferred way of most of the investors should be looking into this. In simple words, when you're buying a commercial real estate, there are about 30 plus action items that you have to go through as an operator, right? So if I'm an operator, and Seth knows this and Brandon knows this more than anybody, before I can even find my first commercial real estate to purchase, I need to understand the asset class. I need to build a relationship with the brokers. And I need to get beaten at least 10, 15 times on the bidding process before I can win my first one. Once I win the deal, then I have to go back to guys like Seth and build a legal document around it, which we call a PPM. That legal document enables you to start raising capital. Now, I'm not going into the complexity of establishing that legal document. That alone is like 4 or 5 steps long process. And if I take another 10, 20 minutes to explain that process of how you really go buy your first commercial real estate, it's probably going to take more than 10 minutes for me to explain it. But one thing that I promote quite a bit is that if you're new to commercial real estate, it's your job to understand every aspect of the business. But if you try to do everything at once, you're not going to be able to make it. I've hired people who have gone through different gurus and they oversimplified it and they made it sound super easy that you can come in, pay me $40,000 and I'll make you a operator. I'm an operator myself and we have indirectly about 160 employees between 30 plus assets. And I can tell you over the last 16, 17 years, what are the processes, what are the things that I've gone through to get to that point. Frankly speaking, it all started as an accident. I wasn't trying to be an operator. But if you're trying to be an operator and if you know all of those complexities that you have to go through, you will lose your track. And for that reason, being a fund manager to get your track, to get your way into commercial real estate investing is one of the easiest way to get in. You as a fund manager get to learn the aspect of the business. You as a fund manager are required to do your due diligence on any operator or any partner that you're partnering with. And in return, you basically raise capital from your network, right? And instead of you coming alone and trying to write a single check of investment, you get a certain return. But if you come as a fund manager, your returns are much higher. And you are required to provide a due diligence service only when you know how to understand the underwriting, how to understand the deal, to understand the investment nitty-gritties. For that reason, when you come in as a fund manager, not only you understand the whole business aspect, but you also starting as the building block to raise capital, which is the most important aspect of any business, right? Cash is king. Today, what we're going to talk about is if you decided to be a fund manager, meaning you have friends and family and you like an operator and you want to make an introduction, how can you legally get compensated for those introductions, right? Meaning, how would you actually do and perform your due diligence, bring those assets or those investment opportunities to your friends and families, and how do you legally do it without getting into trouble? Okay. Over the last few years, this syndication industry gone through a cycle, good and bad reputation. But one thing that came out of this cycle is the learning that these fund level operations or the attorneys who set up those funds it's been groomed. It's been matured significantly. So for that reason, I've got our preferred vendor at the moment, Tribevest. Tribevest is, they're making a huge impact into this by simplifying all the legal matter and keeping the cost low. So and I can almost tell you this, if you're trying to be a fund manager, just not in the commercial real estate investing, but pretty much any kind of investment, any kind of business that takes investment, Tribevest is a place for you to go. So without any further delay, I try to give as much explanation as I could. I don't know how much right or wrong, but please feel free to correct me. With me, I've got Seth Bradley, Brendan Clacy, and Ron. These guys are from Tribevest. They've been doing it for several years. They've done, safe to say, over 100 deals. And Seth alone, you probably have done close to 1,000 legal paperwork for these kind of deals. Guys, floors are yours. Please take it from here.
Absolutely. I'll take it from here. Brandon Clace, just want to introduce everybody. Brandon Clace is our Director of Strategic Partnerships. Rohan is our Head of Marketing, and I'm the Chief Legal Officer for Tribevest. So we're all here. If you have any questions or anything like that, drop them in the chat. And I'm going to share my screen and we can roll through a few slides because I think having the visual actually helps figure this thing out a little bit better. So we need to send the requests. Sid and Farah, thanks so much for having us on today. Thanks to the whole Headway Capital group. Really appreciate it. Oh, there we go. All right. Can y'all see that?
Yep, we can see it.
All right, cool. So, how to get paid to raise capital compliantly. It sounds simple, but the general rule is you have to have a license to raise capital. A broker dealer is what we're talking about. You have to have a license to practice law. You have to have a license to practice medicine. Just like that, you have to have a license to raise capital unless you can find some sort of an exemption. And if you're raising capital, you're under the SEC regime, and there are lots of pitfalls, lots of things that you can get into trouble for. But Tribevest has made it very simple, taken a very complex matter, as Sid mentioned, and made it super simple for anyone to really jump in and launch their capital raising business.
Awesome. Seth, most of our audience will be mostly LPs trying to become fund managers. So you'll see a lot of new people who are new to this terminology. I would only request to, make it a fifth grader, right? So, what is SSC and what is security law and what are the license as you go through it.
Okay. Definitely keep that in mind. And feel free to jump in, Sid, if I get over my skis and you're like, hey dude, like what are you talking about? Feel free to jump in and we'll make some clarifications. Quick disclaimer, I am an attorney, but I'm not your attorney. Tribevest is not a law firm. We're not a CPA firm. So we can't give you legal and tax advice. So take this as educational and informational purposes only and seek your own counsel. Sid mentioned I'm a securities attorney, been practicing securities law for over 13 years. Built over probably close to 800 funds and syndications by now, 9 billion in transaction volume, 3 billion capital raise. People like working with me because, I don't talk and I don't look like your typical attorney. And that's because I'm a business person at heart. I'm an entrepreneur. I'm a capital raiser myself. I'm an operator myself. So folks like working with me because I tell them like it is. I'm not going to tell you, no, don't do this or it's impossible. I tell you how we can get it done and we fix a problem and we solve it. So what we'll cover today, the opportunity where private capital, which is what we're talking about today, private capital is moving the old way, why the co-GP model is dead, and we'll explain what that actually means. The solution, which is the fund of funds model, and the ICA, and we'll explain what an ICA is as well, what that role is, and how you can get paid to do this. So how you can legally, compliantly get paid to raise capital. There's really three main ways. And then we'll jump into the Institute for Structured Capital, which is our program to have you launch your first capital raising project for great lead sponsors like Headway. So capital is moving back in. We've hit a little bit of a slowdown here since 2022, 2023, but you can feel it. You can feel the tailwinds. Money is starting to flood back into commercial real estate specifically. Different asset classes are getting some momentum, and you'll see the $13.3 trillion is going to be moving into the private real estate market by 2032. And that's just a small slice of the 65 trillion that's going to be heading into the private markets by 2032 in general. And that doubles the pace of the growth in the public markets, just to put that into perspective. So the access gap here, and some of you are in this bucket, right? Some of you are passive investors. There's 80 million folks here in the US that are investors and they have brokerage accounts, right? They're TD Ameritrade, the Robinhood, they have brokerage accounts. they have 20 million of those folks are accredited investors. So they qualify to invest in, certain investments that others are not allowed to invest in. And 10 million of those, so half of those 20 million here in the US, want access to the private markets. I'd say everybody listening or watching this call is in that bucket. You want access to the private markets. You understand the opportunity there and you want to be part of it. But actually, there's less than 1 million people out of that 10 million that's interested, that's actually investing in the private markets. So there's this gap. There's a 9 million person plus gap that we need to figure out. And here it is kind of visually, right? You've got these operators like Headway, great operators. They know their business. They know exactly what they're doing. They can find deals. They've got these employees. They've built a team, right? And then you've got these 10 million investors that want to invest. So both sides want each other. It's just filling that gap. And how do you bridge that gap? How do you introduce one to the other? Because they both have a need that the other one needs to fill. And I'll say that, and I'm not going to go too deeply into this, but in the past, we've tried to fill that gap with what's called a co-GP. So this is a person that has access to a network, probably has access to deals, lead sponsors, and they filled that gap by actually getting into bed or getting into business with the lead sponsors. So they're co-GPs. Co-GP as a word right now is kind of faux pas. You don't really want to say co-GP anymore because you're either an active partner like Sid or you're not, right? Sid doesn't want to bring in kind of random people into his active business and become business partners with them just to get access to their network. When you get into business with somebody, it takes a long time to build trust and you're going to be in business with them for a long time. And you don't necessarily want to do that. And actually, if those people that Sid or any lead sponsor gets into business with are only raising capital for his deals, then it's actually illegal. It's not compliant because, as I noted at the beginning, you have to have a license to be able to raise capital. And most of these folks do not. Some of them do, but a very, very, very small amount do. And basically, the industry kind of did this thing called the co-GP model, where people were raising capital non-compliantly for other people's deals. And you saw that some of those folks were starting to get in trouble. So we needed to find a different solution.
Yeah.
So I'll just add one thing here, Seth. The co-GP for our audience, and this is going to be a recording for most of our capital raisers who have been doing it or who are brand new. Obviously, the GP means a general partnership, and if you're trying to be a general partner with somebody, meaning you and your partner is going to run a business. And what Seth is essentially trying to explain is that you cannot just raise capital and go home. You have to be materially involved in taking business actions, which may or may not be a great idea for any of those partners. Like I want to take, as an operator, I want to take quick decisions. My L10s or my operational meetings happens every Tuesday. And we take those decisions on that Tuesday meeting. We don't wait for Wednesday, right? But if I have 10 other co-GPs, it's almost impossible to run any business. There are too many cooks in the kitchen. So that being said, the SEC immediately recognized it that this is not a sustainable way and people will continue to get in trouble because they're raising capital and they're not materially involved, or they're not taking decisions, or they don't even have a skill set to take decisions. And this is where, why we're doing this presentation is to explain it to most people who are wanting to learn business, do not have enough capital to get on or take over a business, like commercial real estate in this case, and do not have expertise to take decisions. What they do know is that they can understand and identify a good deal versus bad deal based on their trainings, which we provide, by the way. October 1st, we're launching a program. We're going to train fund managers to identify what is a good deal versus a bad deal. But once you do all of that, you need a legal framework to make it happen. And that's what Tribevest provides. So, Seth, go on, please. I don't want to interrupt you, but I just want to make sure the newcomers or newbies understand why they may not even know what the co-GP was, because very, very few people are doing it these days. But if you're trying to be a joint venture with somebody or whatever, even if you do a joint venture and you're only raising capital and not doing anything, that construed as illegal as well. You can get into trouble of those kind. But Seth, go on, please.
Rohan, do you want to jump in there? Do you want to say something?
Yeah, I had one thing I wanted to add. I have the privilege of speaking to a lot of LPs who do want to make this transition to a fund manager. And really the nice part is all it comes down to is that if you're an LP, you're likely some sort of accredited or investor with some capital, and other people like you. So maybe you're a doctor and other doctors, or maybe you're a lawyer, other lawyers, and and these people in your network are asking you about different investment opportunities. Like, hey, you invested in deal with Headway, like, how's it going? Maybe should I invest? So the whole goal of this is to take your network and be able to recommend them these kind of deals and get paid in a compliant manner. So if you're an LP watching this kind of how this whole thing fits into your ecosystem. Go ahead and continue on, Seth.
Yeah, totally. If you're and that's the thing, right? If you are a passive investor, you probably like passive investing. You want it to be as passive as possible, right? Like you don't want to be an operator. You don't want to be a GP or a co-GP, whatever you want to call it. You probably have a full-time W-2. You're probably doing something else, and that's why you're passively investing. So the idea of operating, of being a GP, of making decisions, of being an active participant, of going to meetings every single week, that's probably not something you even want. But one thing that you do have is this built-in network of people that have money, right? Other people that are your friends and your family and your colleagues that are in your network that have money, and they're interested in investing in deals like the ones that you invest in. And that in itself is valuable. So how do you harness that value? That value is harnessed through what's called a fund of funds. And that gives you a compliant legal structure for you to be able to harness that network and not necessarily be this active partner with someone like Headway, where you're going to have decision-making rights. You're going to have to go to weekly meetings. You're going to have to do all these things that you just don't have time for or the desire to even do.
Absolutely.
And here it is, the better way, a fund of funds. So instead of the co-GP filling that gap, you see what we call ICAs sometimes, independent capital aggregators. Is really long words, but you'll hear me say ICA. It's really a fund manager or a fund of fund manager. This is a person that can aggregate their network, aggregate their capital from their friends, family, from their network, and connect those folks, those retail investors, to people like Headway that have great deals and that can operate and have the systems, the processes, the people to be able to manage large assets that you frankly don't even want to do, right? You just want to see how to 2x or 3x your returns in deals that you're already going to be investing in anyways.
I'll say one other thing real quick. If you go on
Yeah.
back slide, Seth. Yeah, people were asking. I was doing a recording just before this webinar. Somebody asked me, if you would go back 10 years, what would you do differently? I'm like, man, I wish I'm just an ICA, like a fund manager, and not handling with all the operational headaches that I have to go through. It was not there 10, 15 years ago. It was not there. It's, this is recently new. But one thing that I want to add here is if I'm a fund manager, and all I have is connections, people that I know. And again, my bucket of people is not huge. It's probably 10, 20, 50 people that I know. But even if I have those connections, I will never get to an access to institutional quality deals that me and my competition, when we go and bid on a certain deal, we get the access to those deals because we've got 15, 16 years of track record with those brokers. So even if you try to be a co-GP and you think that you're trying to become an owner of an asset, you're actually not, because you're bringing a small portion of funds for a very big, large raise, and you're not going to have a control rights of any kind. Yes, you will have your voting rights based on how much you're raising, how much your capital that you're bringing. But unless you're a 50% owner, meaning a $20 million raise, you're bringing $10 million. That's a very big amount. But rather, you as a individual investor become an independent capital aggregator, which is ICA in this terminology. We call it fund manager. And if you become a fund manager, your whole pool gets a higher return. And that's at least how we do it. We give higher return to our fund managers, to the fund manager himself and the people who brings, versus somebody comes directly to us.
That's right. That's something you can think about just in a simple way, is that the folks that you bring in, your network, if you work with the right lead sponsors, they're actually going to get a better deal by investing through you than if they invested directly with that lead sponsor or directly into that deal. And we already kind of went through this, and just for time's sake, I'm going to skip through. So why isn't everybody doing this? Well, you can kind of pick that up, that it's difficult. It's difficult. There's a lot of moving pieces. There's a lot of parts that you have to put together to be able to do this. And again, if you're an LP, if you're a full-time W-2, if you're a doctor, dentist, lawyer, tech executive, it's not something you even want to do. Like, you don't want to put all these pieces together. And just the legal piece by itself, which you can see there on the left, that's going to cost you at least $25,000. I worked at a large law firm. $25,000 is not maybe in the boutique world, but when you work at big, and if you go to a big law firm, it'll cost you $75, $100, $125,000 just for the legal piece, just for the documents. And then you still have all these other things on the right that you have to deal with: your business banking account, setting up your entity, an investor portal, all the softwares you need, your fund administration, your taxes, getting a CPA that even understands what you're doing, that even understands capital raising and funds. There's just a lot of different pieces, a lot of different teammates and vendors and softwares that you need. And frankly, if you're full-time W-2, you're just going to say no. You're going to be like, this is not worth it. I don't have the time for this. It's a full-time business in itself. So there had to have been a solution to be able to bring this to the masses, to be able to bring this to the market. And that's what Tribevest built. We include all of these things all under one roof: the structure, the compliance, the infrastructure. We've got in-house counsel, obviously, offering documents, your business banking, your EIN, your entity setup, compliance management, taxes, K1s, fund administration, help you with set up your cap table, who owns what percentage, what distributions you're supposed to send to each one of your investors, your investor portal, CRM, all the things that you would need to run a business like Headway runs their business, except we put it on one platform for people that don't necessarily do this full time, or that at least want to get rid of the headaches and have everything in one place, even if you do this full time. And we've made it super simple for you to be able to execute on a capital raise. And you can see the old way versus new way. There's different contracts and softwares you're going to need. It's all on the Tribevest platform. Setup costs $25,000 at least. Just the legal and the compliance, and then Tribevest is only $5,000 to set up. Time to launch 3 to 4 weeks or longer. If I have my securities attorney hat on and you say, how long is it going to take you to draft these documents? It's probably going to take me 4 weeks for the first drafts, and then we're going to go back and forth, and then it's going to take a month and a half, 2 months just for the legal docs. We do it in 5 business days at Tribevest. So if Headway has a deal and they have launched it and you love it and you have interest from your network that want to invest, then you can launch your capital raising project, your fund to fund, in 5 business days. And most, if not all of these things are done for you. They're certainly done with you, but most are done for you. And our software makes it super simple for you to launch. Proven success at scale. We've raised over $250 million across our network in 2.5 years. It hasn't even been very long. 300 plus compliant fund of funds launch across 200 ICAs. And again, 5 days is the average fund formation time. Caliber of the room. So, these are the types of people that are raising capital on our platform. Morgan K, 20 million raised. Bronson, 50 million. Suja, 25 million. Chris, 2 billion in assets acquired. So don't be intimidated by these numbers. Everybody starts somewhere. There are so many of our clients that are raising $500,000, $1 million. I think our average fund to fund is just shy of $1 million. But this is just to kind of show you of where you can take it and the type and the caliber of people that are on our platform and that are using these tools to launch their capital raising business.
Seth, I'll add one thing real quick here. When I present our presentation, we go over our assets under management, $500 million. And I say this for myself. It's like, don't get impressed. Like just like you said, it's everybody started from somewhere. So I literally can tell you, Chris Larson, Branson, Morgan, I know all of these guys. They were just like anybody else about back in 2018, 2019. They were just scratching the surface, and in a matter of 5 years plus minus, which you can subtract 2 years of no activity, 2022, 2023.
Yeah.
It's the reason I'm chiming in here is because with the names that said your slide showing, I know these people. I talk to them almost every quarter or every other quarter. And these guys just started like anybody else. So, just a vote of confidence for anybody who's thinking about starting in this field. Right? Think of this as not as just a side gig job, but really your small business, which can convert into a very big business, and which is what it is right now.
Yeah, absolutely. And how many employees did you say that you have?
Plus, direct and indirect, about 160.
Yeah, insane, right? Lots of people, lots of human beings to manage. And I imagine lots of headaches if you decide to go, and this is probably why you said it, but if you decide to go on the capital raising side, the fund manager side, the ICA side, you don't need all those heads.
You need 3, maybe 4 employees.
I
think Chris Larson probably have 2 employees.
I think 2.
Branson probably have 1 employee. Yeah.
Yep. You can scale massive businesses with just yourself to start, and then maybe add one other person, and then at most one more person on top of that. And then you've got a full business and you can run businesses this large that are generating tens of millions of dollars. So what is an ICA? 3 roles in every deal. You've got the lead sponsor, that's Headway. You've got an independent capital aggregator that sits in the middle, and then you've got the investors. You've got the network over there on the right that connects. As an ICA, again, you don't run the asset, right? You build the relationships, you raise the capital, you manage and administer your fund. But through Tribevest, we make it really, really easy for you to be able to do that. Whereas before, that in itself was a very complex job, and you might have needed multiple people. You might have needed a lot of human beings to help you manage that. But now through software, through technology, through efficiencies, you can run that business yourself. And then when you scale, maybe grab one other person if you need it. And that's way down the line. So who should become an ICA? There are passive investors with a network. A lot of you out there are in this bucket. You don't even realize how good of a capital raiser that you can become, but we've seen it happen time after time after time. Folks that invest passively tend to have other friends and family and colleagues that can also invest passively. They just have to bring them in. All they have to do is tell them about their deal that they're investing in. And that's the powerful piece, is say, this is the deal that I'm investing in. Do you want to invest alongside of me? Because I believe in that deal. That goes for a big vote of confidence for them to be able to participate in the deal as well. That conversion is happening every single day across our platform. Former co-GP raisers that are looking for a more compliant vehicle, operators who want to transition. I could throw myself into that bucket. I've done both. I've raised capital. I've operated. Operating sucks. It is a lot of work. You have to build a team. You've got weekly meetings for every property. Sid knows this. I mean, it is a lot of work, right? A lot of that stuff goes away when you're just raising capital. A lot of that goes away.
It's a soul-sucking W-2 job. The exact W-2 job that you're trying to get out of.
There you go, right? That's hilarious. Advisors and registered reps, RIAs, financial advisors, you guys already have a network. You're already managing money. This gives you an opportunity to place it and still keep it under your belt. Some of the best ICAs or LPs, they invest through your fund. You get paid compliantly, and Tribevest just gives you the vehicle to be able to do that. Again, we see this time after time after time. A lot of the people that are raising tens of millions of dollars on our platform started out as LPs. They said, "Look, I want to try this," and they raised $500,000, and then they raised $1 million, and they did it again, and they did it again, and they did 1 or 2 a quarter, and then now they have just this massive business and created an incredible business for themselves. And again, with 1 or 2 people involved. That's it.
Yeah, I want to add one other thing real quick, especially if you're coming from a real estate background. Let's say you're a realtor who's selling luxury houses or fix and flips or dealing with investors, or you're coming from an engineering background and you have a bunch of engineers or your friends, or like Seth has been keep alluding. But I know some of the people who are attending right now, they're from that background, and they either invest in commercial real estate or they invest in other businesses. So, when you're working when you take over this as a starting business, small business, growing up to a bigger business, you can make 6 figures, healthy 6 figures every year just by doing that. And that might take, fraction of your time of W-2. Plus, you're not an operating partner. So nobody's coming to you with a lawsuit, right? Hey, somebody trip and fall on your property. I'm dealing with it, right? People trip and fall, even if there is no trip, right? They just fall and sue you. So go on, please.
I love that. Even if there's no trip, they just fall. So why would an operator do this? Why would Sid do this? Well, instead of, if they have to raise, $10 million, they'd have to deal with all these investors, right? 100 individual investors, $100,000 each. That means 100 wires, 100 K1s, 100 relationships to deal with, 100 more humans that they have to deal with every single day. Otherwise, if they find these fund managers, they find these ICAs that can help them raise capital for their deals, they don't have to deal with 10 fund managers, $1 million each, 10 wires, 10 K1s, 10 relationships. It's much easier for them to manage. So they need you. So keep that in mind. They need you. And we're seeing this across the country with the best lead sponsors out there are focused on this. They're focused on recruiting fund managers to help them raise capital for their deals. They're taking them to football games. They're creating curated events. These people are getting courted, right? They're getting courted like they're going to get drafted in the NBA. It's insane what's going on out there. So if you jump into this game, you're going to be desired. I'll say that. You're going to be desired. And you get paid in 3 ways. So let's talk about this quickly. And if you're investing passively, you can relate to this, right? It's the fees that you paid, right? The way that you invested, except now you're on the receiving end. So I like to just call these the upfront fee, an annual fee, and an exit fee, because no matter what you call it, and there's a bunch of different names for these fees, you can identify what they are by calling them that. So an upfront fee could be called an acquisition fee or a due diligence fee, and you might charge 2 to 3% of the capital committed. And on $1 million raise, that looks like $20,000 or $30,000 in your pocket up front. An annual fee might be called a fund administration fee or an asset management fee. Maybe you charge a half a point to a point per year, so you get paid that every year. That could get distributed across the quarter, so it's more evenly laid out for you, and that can look like $5,000 to $10,000 a year. And mind you, this is just for $1 million raise. This is just for you getting started. And then an exit fee has many names. You could call it carried interest or promote or things like that, where you charge, you have an 80-20 split or a 90-10 split after some sort of a preferred return. And typically that's where you're going to see kind of the windfall bucket for you. And you can see, like, if you invest passively, let's say you invest $50K, you might expect to double your money in 5 years. That used to be kind of the old rule. But if you raised, $1 million alongside of that and just brought in your friends, you're going to 3x that return over the life of the deal. That's going to get paid at the beginning, throughout the years, and at the exit. So if you're going to invest in the deal anyway and you have the network, it just makes sense to say, all right, let's just spin this up on Tribevest and let's bring my network together. Let's invest together, and you're going to 3x your return. Case study, here you go. So this is one of our.
Absolutely. Seth, I want to add.
Yeah,
I want to add one real quick item here. There was a slide that showed why Sid and why other operators are not doing it. One of the reasons that businesses, I say this to my team all the time in our team meetings, that businesses never die out of hunger; they die out of overeating. Right. So that's one of the reasons why we focus heavily on operations, because if you're not operating it well, there is no business. There is, go home. There's nothing. Right. So our focus has been, sure, we've had experience raising LP capital ever since we started, and good part of attention goes there. Right. And if I can reduce that distraction and focus more on operations and establishing and scaling our business sustainably, that is going to change the whole equation, right? A fund manager investing with us today, getting the profits as per the projection, more likely going to invest with us again, right? And that's our focus. So you might think that, why not we do what you guys are doing? But frankly speaking, we have done it and we have seen the distraction and the workload that it takes. We might as well focus on operations, our day to day, so that our returns bring you or these fund managers back again.
Yeah, that's a great point. We have real examples of that, of other lead sponsors that have said, all right, we can build this, let's do it. And then they said, man, this is a lot of work. This is a lot more work. It's a lot more time that's away from us focusing on our core business, which is operating and managing the assets themselves. Real quick case study. This is a real example of one of our clients. This was probably 2.5 years ago. Did his first raised $633,000 across a small number of investors, just 7 people. Took an $8,000 acquisition fee, but he just kept going. Raised $2 million for a paving company, 1.2 for a multifamily. Now he's done close to 40 fund of funds and raised, it's well over this now. It's approaching 40 million plus, and got about $3.3 million in revenue so far. And most of these deals obviously have not even exited. So that's insane. That's an insane amount of wealth that he's created for himself and his family in 2.5 years. So that's how quickly you can scale. Because again, you don't have the anchor of scaling with humans, because that takes a lot of work, a lot of headaches, and a lot of mouths to feed. And when you can just focus on yourself and focus on the deals and focus on the relationships, you can build a big business really fast.
And that's without handling any operations headache.
That's right. When you can, you're focusing on, when I say you, I mean, you said you're focusing on the asset, you're focusing on running the business. The capital allocator can focus on their network and the relationship and just do what they've been doing, right? They're just being friendly with people. They're just having conversations. They're just talking about what they're doing. Not a lot changes.
I don't want to keep distracting you from the topic, but one of the things that I always categorize what kind of business, if somebody asks me, hey, what kind of business should I be working on? And I tell them, it's like, if you really want to figure out what kind of business you want to work on or start, you want to look at two elements. Obviously, you have to have a product and service that you're providing, but what's the caliber of your clientele and what's the caliber of your employee tail, right? If your employees are going to be tough employees, you're going to have a tough time managing that business. And if your clients are tough, then it's going to be tough. So as a fund manager, you're not dealing with the employees, whether they're good or bad doesn't matter, right? I mean, if I'm Google, or if I'm BlackRock, all of my employees are highly paid, they're high caliber employees, but I'm not. But my investors are high caliber. So you as a fund manager, your clients, you don't have any employees, hardly any, but all you have is high caliber employees. To me, if you work with the right operator, growing your business could be extremely fast. Why? Because you're not dealing with employees issues who are not high caliber by any means.
Yeah, absolutely. And now introducing the Institute for Structured Capital. This is how we are solving this problem. This is how we're solving, some of the questions that you're asking yourself right now. Like, I get it, but there's still kind of this mystery around it. This is our solution, right? So what is the ISC? The Institute for Structured Capital. It's an 11-week accelerator for capital raisers who want to build a compliant, professional fund-to-funds business. And I just want to be very clear that it's not another course. There are other capital raising masterminds and courses and all these things out there that you pay a lot of money to be a part of and to learn. And they're all great. We're partners with a lot of these folks, all the people that all the big names out there, we partner with them. So we are not competing with them in any way. And the reason is because we built this to be fast, 11 weeks. And we built this so that at the end of the accelerator, you're actually launching your business. We're going to help you launch your business week to week, help you build the tools, help you teach you how to use the Tribevest platform to launch your business. So by the end of it, you're actually accepting investor capital. That's the goal. The goal isn't to teach you and then say, hey, good luck. And then you got to go out and, call a bunch of people and review the materials and watch the modules and do all these things. And then you don't have anybody there to help you at that point. We're here to help you. We're here to walk you through it and do it with you step by step so that by the end of the accelerator, you're actually raising capital. And there's 4 pillars here: attorney-led curriculum. Each week it'll be led by me. I've guided over $3 billion in capital raises across my career. Number 2, fund infrastructure and compliance. So all the pieces, all the tools, you're going to learn about them. You're going to know what they are. You're going to be able to speak the language, and we're going to form it inside of the Tribevest platform within 5 business days. Number 3, institutional deal flow and relationships. We're actually going to have 5 live deal presentations from lead sponsors who've collectively raised billions of dollars. They have billions of dollars in assets under management. We're going to introduce you to those folks. You're going to create one-on-one relationships with them. You're going to be able to book calls with them. And those are relationships that are essentially priceless. I mean, if you just find them you can find lead sponsors on LinkedIn, you can send them messages, but it's going to take you a long time for them to respond, for you to develop a relationship with them. We're going to cultivate that right inside of the curriculum. And number 4, curated community and certification. So you're going to be part of cohort 2. Cohort 1 sold out in 2 weeks. We had 31 people in that cohort. You're going to have the same thing here. You're going to have people that are going to be in the same shoes as you. They're going to be maybe above or below you as far as how much capital they've raised so far, or none at all, or tens of millions of dollars. They're going to be from all walks of life, and you're going to be part of that community for life. So you're going to be in the ISC alumni network and join all the other cohorts as well. And those folks are already mingling and creating monthly meetups and vetting sponsors and deals together. So it's something that is just priceless across a lifetime. And at the end, you're going to have an ICA certification. So long as you show up, you do the work, you participate, you're going to get an ICA certification. And think of it, what we're building is kind of like a CCIM. For those of you familiar with the real estate world, something very similar to that, except in the capital raising world. Built for capital raisers, not just fund to funds managers. So again, if you are a passive LP and you're thinking about it, this is for you, right? How do I make that transition over to raising capital? We're going to show you how to do that. Folks that maybe they're syndicators, maybe they're lead sponsors, and they want to transition over to capital allocators, or they want to learn how to raise capital in their own business. This also applies. All of these concepts that we're going to teach you about raising capital apply whether you're the lead sponsor or a capital allocator. Either way, it's the same, it's the same stuff. You're talking to investors, you're building relationships, you've got these these different steps you've got to take to get them through the investment process. So it's not just for fund of funds managers, although we will be building a fund of funds for you and with you throughout the process. And we launched the ISC now because of these reasons. The information exists. So I'll tell you that all this stuff is out there. Like if you go to YouTube, if you go to Google, if you go to Claude and you ask it questions, all this stuff is out there, right? Like, but for you to be able to ingest it and learn it and know how to execute step by step, somebody has to put it in the right order and they have to teach it to you and make you execute on it. And that's what we're going to do. The infrastructure exists. We've already done this. We've done this hundreds of times. So now we know exactly the formula. We know if you just participate, if you show up and you execute, you're going to be successful. We know what works and what doesn't. The deal flow exists. We have hundreds of lead sponsors across our platform that want more fund managers. We talked about that earlier. They want fund managers. That's the name of the game right now. That's what people want. This is a desired class of person. Like everybody wants fund managers right now to raise capital for their deals, and nobody's assembled it. So we're the first ones to do it. And there are other groups out there, again, capital raising groups. This is not that. We're here to help you launch your business in the accelerator, not just educate you and tell you good luck. 11-week curriculum, 5 weeks of that are deal presentations, and there's 6 weeks of actual what we call pillars. So these 6 pillars of education that we're going to be going through. Week 0 is really just a kickoff, and then week 1, we're going to be talking about compliance, building a business you can defend. Week 2, we're going to be talking about economics. So we like to call those fund-to-fund economics. So if you think about what we talked about today, Sid's going to buy an asset. That asset is going to produce some sort of income. That income is going to have to flow to the lead sponsor, and then that's going to flow to the passive investors. And your fund to fund is actually just a big passive investor. So it flows down to you, and then it's going to flow all the way down to your investors. There are some complications there. There's some complexities. There are some calculations you have to do. We're going to teach you how to do that, how to explain it to your investors, how to make it as simple as possible, and set up a deal that's going to be successful for you to raise capital into. Finding and vetting sponsors and deals. How you talk to these lead sponsors, how you vet a lead sponsor, how do you look at their track record and determine if what they're saying is true, how you vet a deal, how you underwrite it, all those things, very important. Probably the most important thing is right there, finding and vetting good sponsors and good deals, and the close. So I like to call these the soft skills, marketing. Rohan, why don't you jump into this, man? Rohan is a genius in marketing, but all these things are, these are the things you're going to be doing every single day.
Yeah, I know we're running low on time, so I won't go as long as I could. But I think what's amazing is that, marketing for capital raising there's so much out there. It can be so confusing. I think what's great about Tribevest and the way we've assembled is we've made it very simple, and we've given you the exact steps you need, meaning that once you join, there's like very simple worksheets. There's exact like copy and paste assets in there. So the good news is that we can help you scale the marketing in your capital raising business in a very efficient way, as very little left of your time. And fundamentally, a lot of what we built replaces thousands and thousands of dollars you would spend with a freelancer or a consultant or another agency. So you save a lot of time, you save a lot of money, and more importantly, you do the things that are important. Because if you want to run marketing, I can give you 10 strategies and I can, spend 3 years doing it. But let's start with the simple things. We give you the simple stuff you need to get off the finish line there.
Yeah, love it, love it. And then fifth, infrastructure. So your back office, your deal page goes live, all the things, all the tools, the platform. We're going to walk you through it. We're going to help you build it right there in the spot. And then scaling. How do you scale? How do you scale from that first $500,000 raise up to $50 million and have generational wealth created for you and your family? We're going to show you how to scale, and we can walk through this. But I charge $1,000 an hour. So 11 weeks, and this isn't even prep time, $11,000 for attorney-led 11-week cohort. Your fund formed in 5 days, $25,000 for a boutique firm. But again, if you go to a large law firm, you're going to triple, quadruple that. It's going to be a hell of a lot more. Live deal access with 5 sponsors, priceless. Those are relationships that you're going to have, that you're going to get to cultivate and have one-on-one calls with. Deal page and soft commitment funnel. So building your page live, $5,000, find out whether people will invest before you actually launch anything and before you spend any more money. And my camera is tired. It is tired. So I'm going to switch over to another one here in a second. ICA certification, something to point you to when a sponsor asks why they should work with you. This is industry first. So again, this will be akin to a CCIM when we're talking about real estate. And curated peer community, $12,000 lifetime access to capital raisers who bring each other into deals. You can find and vet sponsors together. You can create your own meetups. We will provide continuing education even after the cohort ends. And you're going to have access to hundreds of other capital raisers within that network. And you're actually going to meet these people in person at the Best Ever Conference. We're a huge sponsor over there with Joe and Matt, and we're going to have a VIP summit only for people that graduate from the cohort. So there's only going to be, there'll be 3 cohorts by then, and it's going to be in Dallas in March, and it'll be an exclusive invite for only for people who graduated from the cohort. And proven marketing frameworks, which we talked about, that help raise 8 figures, 3,000 plus. So there's the core program, $59,000, $60,000. These are actual real values. I mean, Rohan sells his marketing stuff on the side or before he joined Tribevest and charges tens of thousands of dollars for the things that you're going to receive in this. And while I switch over my camera, Rohan, you want to go over pricing?
Yep, I can speak to this. The great part is that this cohort, we use the word functionally free because the cost to you today is $2,500 to join. However, that fee is 100% credited when you launch your fund to fund on Tribevest. So the net is that if you're launching a fund on Tribevest, regardless if you do the cohort, let's say you just went to Tribevest directly, it'd be $5,000. If you're doing this cohort, there's no additional cost to join the cohort. So the end result is if you're planning on doing a fund to fund on Tribevest, you should just join the cohort. And it's funny, Seth, I think I've seen like 15 people trying to sign up in the last 2 days. And like so many of them are our best fund managers on Tribevest because they're not spending any additional money to join. It's a complete, basically free educational resource we're giving to you. And then one other thing I was going to say is that if you're part of the Headway Capital community, you can use code, I'm forgetting the code, I believe it's HEAD1000 for an additional $1,000 off. So it's actually only $1,500 to you today if you're joining.
Nice. And there it is. So there's the scanner. A cohort starts actually this Monday is kind of our week 0, just kickoff, setting the stage call. And then the real education starts next Thursday. And they'll be held every Thursday at 9 a.m. Pacific time, noon Eastern time for the next 11 weeks. So reserve your seat now. There's only a few spots left. We will cap it because we always get a rush at the end, and then we're going to cap it because we want to be able to curate that experience for everyone, to be able to interact, to be able to meet the lead sponsors, and to just get an authentic experience. Right? When you get too many people in there, I've been in those types of groups. You just don't get the same experience. So we're going to cap it. So reserve your seat there. And if you need to, you can actually just go to that link and find more information as well as a lot of the stuff that we went over today. Or if you do have more questions, go ahead and book a call with Daniel. But again, we only have a few days left, so we're running out of time, but I think he does still maybe have a few spots on his calendar before then. Go ahead and book a call. He's our man here inside of Tribevest, and he can answer any questions that you might have.
Seth, can you go back on the previous screen for real quick?
Yep.
So through Headway, you guys are getting about 40% discount or something like that. And I can tell you the amount of money that I've spent on attorneys and preparing those legal documents, 25,000 times 40 deals that I've done. I've lost count. Right? I think I could hire a full-time attorney in my company to run that. Not Seth. Seth is a businessman. He's not going to join anybody. But the cost I'm trying to share here is that this cost has been, for the stuff that you're going to learn alone and not do anything, that alone is extremely, extremely, extremely low. I've never seen, being 100% transparent, these guys are not paying us. I'm not getting paid to say anything positive or negative about Tribevest. But the costs that they're presenting today, I'm pretty sure next year is not going to be that. It'll be much higher. If you get in now, the best thing that you'll get out of it is the learning, this 11 weeks of cohort. What Rohan mentioned about the marketing piece, we spend tens of thousands of dollars in marketing and have 4 people and all those things. That alone is crazy how you're going to get an access to that. So anyway, back to you guys.
Yeah. And the reason the price is so low is because we're not competing with other capital raising masterminds or courses or anything like that. Like we're not in the business of masterminds. We're in the business of launching businesses. We're helping you launch your capital raising project. And this is a way for us to give you the confidence and give you the skill set that you need to be able to do it confidently. And I did want to jump through this because Rohan did add a couple more marketing pieces on here that he's created that he sells for tens of thousands of dollars outside of this, but he's going to provide his fund manager CRM. So his templates that he charges for by itself. and the AI prompt library, which, everybody's turning to AI. Everybody needs to use AI in their business and to be able to, create efficiencies and effectiveness in their business. And Rohan has perfected that. Anything you want to jump in there with, Rohan?
Yeah. I think it's funny because when I joined the first cohort, or whenever Seth and Travis invited me, this was not a part of it. These are new bonuses exclusively for this cohort because we identified a need. And the great news is that for us, we have such great relationships and we have such great abilities within Tribevest to do these things. And AI is actually a great example where anyone can build anything with AI nowadays, but it's what you give to the AI, it's what you prompt to the AI. So that's the value of this, right? Because anybody can go onto Claude or ChatGPT and generate something in the next 5 minutes. But if you don't know what you're doing, then you're going to struggle. So instead of doing that and doing it the wrong way, you get it the right way here from myself, who I've had the privilege of working with some of the best operators and lead sponsors themselves. So I know that perspective. I've also worked directly with some of the best fund managers as well. And then I've also now worked with Tribevest. So the great news is I've seen all three perspectives. So you get some of the best practices that I've learned from the years in this industry, doing this in a package that's a templated, meaning it's copy and paste. It's done almost as done for you as it can be done.
And Ron, I think I want to do this for the recording here, but people might say, okay, why do I need marketing? Because I'm going to use my content, my connections and contacts. Well, your bucket will go dry after your first raise, or maybe second raise. You're done. So you need that marketing to reach out to other people. Right.
No, that's actually one piece. The other piece is better is it actually makes your marketing to your network even better, because think about it. Okay, let's say you have no website, you have no collateral, you have no materials. You just go to your friend and say, hey, give me some money. Definitely you'll get some traction with that and that'll be great. But what if you went to that same person and said, hey, I have this, here's my company website, here's my materials, here's my educational valuable content. If you have all that, it's just going to, I would guess probably double your conversions. Obviously I can't, guarantee anything, but it's actually, the way I view it, is accretive, and you're not paying any more money for it. So it's not like I'm, upselling you or upcharging you anything. It's all included in there. So it's really one of those things that ultimately, the whole reason Tribevest is doing this is that our goal and the way we are going to grow our business is through getting more funds launched. Our job is that we looked at the entire process. What are every single one of the blockers? So the marketing, the legal setup, the education, all these things were blockers in the process. So we are eliminating all that so you can launch your fund and get it, set up on our platform. So that's kind of the whole grander vision of this.
Awesome.
Absolutely. Well, I think that's it for the Tribevest team. Sid and Farah, thanks so much for having us today. Sid, you want to wrap it up, man?
No, I think we all I can tell you is like I've paid $40,000 when I was starting out. If I ever launch a program, I'm not charging anything less than that. So this is a great opportunity. Like I said, the cost for some people, it may be, maybe a big number, which I'm sure it is. But in comparison to a grand scheme of things, when you're trying to launch a business, this is a very small cost to learn so much that you have no idea that it ever existed before, right? So with that being said, if you are listening to this recording and you want to get in touch with us, you can email me, email Farah. It's admin@headwaycapital.us or sid@headwaycapital.us. I would advise go through us so that you can use that code. The code is in your chat message as well. In any other question that you think we can answer, happy to do that, or set up a call with Daniel, and hopefully you can start somewhere and be somebody like Chris Larson and other guys that you've seen on the screen.
Thanks, Sid. We do have 2 questions in the chat. Can we quickly answer them as well? Seth, these are for you. So do all participant investors in a fund have to be accredited?
Not necessarily. So it depends on what your target deal is. So whatever deal it is that you're aggregating capital for is probably going to determine whether all your investors need to be accredited or whether there's an allocation for a few non-accredited investors that you can bring in yourself. But we can walk you through the details because it does depend on that target deal.
Gotcha. And then the ICA certification, is this an industry recognized credential or like a Tribevest certification?
I will say that it will be. So it will be an industry recognized credential.
Because there's nothing like that. There's no such thing as fund manager certification. So if anything that can be industry certified, it will be this one. That'll be the first one.
That's right. This is the first one, and this is the second cohort. So we've only been doing this ICA program for 3 months. So it's not quite industry recognized yet, but it certainly will be.
Perfect. Awesome. I think we're good.
All right. I'll pause the recording and Seth, I have a question follow up before we leave.
All right. Sounds good. Thanks, everyone. Appreciate you.